If you're struggling to catch consistent winners in the market, do this instead. So if we just look on the charts right now, one of the main things that we always do and one of the main things that we always focus on is breaks of structure, right? Everyone knows what a break of structure is. We run a previous low within the market. We can see here as well, we run the structure lows here. Now, when we see breaks of structure, typically that's going to show us a trending market, right? We get those A to B swings within the market, and that's going to give us our trend direction. That's going to give us our trading direction. So that's the second layer. Now, the next most important thing that we need to understand is where we're going to be taking our trades. And this is where we use this concept of location here. We take the highest point to the lowest point, and that gives us an area, a general area where we want to be looking for our trades in. So if we take this high to this low, this top section, this top 25% section here is going to be our best area to look for a trade. Then we can utilize the RAMC model. Again, sideways ranging market where prices contain sideways, initiation, mitigation, and continuation, right? That is a repeatable entry model that we can always use within the market to look for a trade. And we don't have to take the trade here. We can wait for price to again show us the RAMC model here to show us it wants to see bearish continuation. And then we're still entering in the best location on the charts here to the downside. Again, utilize your entry strategy or learn ours in this market. Here we can see between this high point and this low point, again, A to B. Where are we looking? We're looking at the top 25%. This is the cheapest prices or the most expensive prices where we can sell. This is why this is such a great location to look for sells. Again, we utilize the RAMC model, sideways range, initiation, mitigation, continuation. We wait for price to react in this location, and typically we want to see price running above highs and not extending here, and then we can play that new direction within the market. And if you're zooming in on, let's say, a 1 minute time frame or a 15-minute time frame, any bearish continuations down into this low are extremely high probability trades. This is the framework that we use inside NJT to create consistent and repeatable high probability trading ideas that always follow exactly the same process. And this is just reading price action at points of mitigation where we're anticipating the next biggest move to happen within the market. If you want to find out more about the RAMC model, comment RAMC down below and I will send you over a 17-page completely free guide that you can use to get started.